When I want to do something, I always want to do it big.
I've said many times that 65 or 70, and the people that you want to have love you actually do love you, you're a success.
You're Warren Buffett, the GOAT of investing. But instead of comfy Omaha and Coca-Cola dividends, you wake up in a country where inflation just hit 200%. Your cash, melting faster than an ice cream cone in July. Your stocks, whiplashing 20% a day. Your savings, worth less by the hour. Today, we're running a crazy simulation based on his financial strategy. But the real question is, could Warren Buffett survive if he had to start investing in a country like Argentina, Zimbabwe, or Turkey? Spoiler, it's not as easy as buy and hold anymore. Get ready, because if you ever wondered how you could survive a financial apocalypse, you're about to find out. And hey, before we start, feel free to support our investing channel by subscribing. It costs nothing, unlike your current debt spiral. Now let's begin. Part 1. The reality of 200% inflation. First off, what does 200% inflation even mean? It's not just stuff costs a little more. It's your groceries tripling in price between breakfast and dinner, your salary becoming worthless before payday, a loaf of bread costing $5 today, $15 next week. Real-world examples. Argentina. In early 2024, their annual inflation rate nearly hit 300%, according to Reuters. Zimbabwe. Hyperinflation in the 2000s. Prices doubled every 24 hours. Turkey. Inflation hit over 80% in 2022. This kind of inflation destroys three things Buffett loves most. 1. Long-term value investing. 2. Currency stability. 3. Trust in financial systems. So how would Warren Buffett play the game differently in this chaos? And hey, if this is helpful so far, please hit that like button for this awesome smiling dog. Part 2. Buffett's core strategies and why they would break. Normally, Buffett's moves are simple. Buy wonderful companies at fair prices. Hold them forever. Let compounding do the work. But under 200% inflation? Problem number 1. Compounding is dead. Inflation destroys the value of future money. If your investment earns 10%, but inflation is 200%, you're still deep underwater. Buffett once said, inflation acts as a gigantic corporate tapeworm. It eats into equity returns. Problem number 2. Pricing power becomes king. Buffett loves companies with pricing power, the ability to raise prices without losing customers. Think Coca-Cola, Apple, and American Express. In a 200% inflation world, companies without pricing power? Bankrupt fast. Problem number 3. Currency risk is nuclear. Buffett famously hates unstable currencies. In Argentina right now, people avoid pesos like the plague. Everyone's scrambling to buy US dollars, Bitcoin, and cows. Yes, literal cows. Holding local cash equals slow financial death. Buffett would have to play a totally different game. Part 3. New survival rules for Buffett. If Warren Buffett woke up in a collapsing economy, here's how he'd adapt like a boss. 1. Hard assets over paper. Forget stocks, bonds, or pesos. He'd rush into farmland, gold, real estate, only prime, rent generating, and commodities like oil, wheat, and copper. Why? Because stuff holds value, paper doesn't. During Zimbabwe's crisis, farmers and cattle owners survived best because their assets were real, tradable things. Bonus, Buffett once bought a farm as a teenager, so he's no stranger to this playbook. 2. Dollarize immediately. Buffett would ditch the local currency yesterday. In Argentina, citizens use blue dollar exchange markets to get US dollars. In Turkey, wealthy families hold savings in gold or euros. Buffett would probably hold reserves in dollars, demand rental income in hard currency, use offshore banking legally to protect assets. 3. Micro-entrepreneurship. In hyperinflation, everyday survival depends on being nimble. Buffett would likely start small cash businesses, trade scarce goods, offer services priced in hard assets. Real-world parallel. In Venezuela's collapse, side hustles like Uber driving, mobile bartering, and crypto trading became lifelines. Buffett might become the world's oldest Uber Eats driver if it made sense financially. 4. Invest in inflation winners. Some companies thrive in inflation: food producers, energy providers, logistics and shipping, and essential healthcare. Buffett would scour the chaos for businesses that can raise prices daily and still sell out. He'd invest heavily, even if it meant owning 5% of the local egg farm instead of 5% of Apple. Part 4. Could he actually win? Answer: yes, but painfully slowly. Buffett's real edge isn't money, it's patience, discipline, and rational thinking. He'd have major advantages: understanding compound assets, recognizing bubbles before they pop, and staying calm when everybody else panics. But hyperinflation is brutal even for geniuses. It's not just an investing problem, it's a social collapse problem. Grocery shelves empty, governments impose price controls, riots over bread and gasoline. Even if Buffett made smart moves, survival would often depend more on street smarts than stock picks. There's a reason no billionaire in Venezuela, Zimbabwe, or Argentina stayed perfectly untouched. Even the rich suffer in collapsing economies, just a little slower. If Warren Buffett woke up tomorrow in an economy with 200% inflation, he'd survive. He might even thrive eventually. But he'd have to break every old investing rule he ever taught. Because in a true collapse, cash is trash, stocks are quicksand. Only hard assets, quick thinking, and a hustler's mindset get you through. And honestly, that's a powerful lesson for all of us. In a crazy world, you don't have to be a billionaire. You just have to think like one under pressure. But here's the big question. Would you survive 200% inflation? And what would your first move be? Feel free to comment below and let us know.
Thank you so much for watching. If you want to learn more, feel free to check out our next video.